Good morning, everyone. I'm David Paul. I'm the Managing Director of VectorVest in the UK. And today I want to do a review of our most conservative investing plan, a plan that we refer to as worry-free investing. Before I get to that, I want to look at both the London stock market and the US stock market. And this chart is the VectorVest composite of the UK market. It's an equally weighted index of all of the companies that we follow on the LSE and on AIM. And I populated the chart with our longest term measure of the trend. And I think you can see the green triangle, which tells us that that longest term measure of the trend is up. And the red triangle, the last of which, last one happened in February the 22nd. And that precipitated that fall. The last up signal happened on April the 27th this year, and that signal is still in force. So that's the signals that we're going to use for our worry-free investing in a few minutes. The American market is in fact looking much more sick in that it's already keeled over and given a sell signal. So the American market, as we probably all know, has fallen quite strongly over the last couple of weeks. So the UK market hanging in there, and for once the American market, in fact, in a worse situation than us. I suspect that that's got a lot to do with the weakness in the pound. Our worry-free methodology relies on buying the UK's safest shares. And at VectorVest, we have a proprietary metric that measures the safety and the predictability of the earnings stream. It's known as relative safety. And it looks at earnings consistency, it looks at the company size, it looks a little bit on volatility, it looks at how long the company's been around. Very importantly, it looks at dividend safety, dividend growth, and it looks at all the accounting ratios, of which the one that I tend to look at personally the most is the debt to equity ratio. And it sucks in all those numbers for every company on the London stock market and spits out one number on a scale between 0 and 2, which represents the safety and the predictability of the earnings. Above 1 is fair, and above 1.3, this is a company that's making money, and all of those accounting ratios are getting better. And for our worry-free investing, folks, we want to invest in shares with a very high relative safety. The objective is to be in the market and fully invested in those high RS stocks when the general market is rising. And the general market is rising as defined by printing one of those green triangles, one of those confirmed calls upwards. The last one we had was on April the 27th. So when we get one of those signals, we want to buy 10 to 15 of the highest RS stocks on the London stock market, making sure that we've got no more than 2 from any one sector of the economy. VectorVest calculates a stop loss for every share on the market every single day. So when the general market is rising, there's a very low probability you'll be stopped out of any of those shares. But sooner or later, the general market will print a down signal, a confirmed down. That's already occurred in the US. It hasn't occurred yet in the UK. When we get a confirmed down, we're much, much more likely to get stopped out. That could mean that in a sell-off, that we would be, let's say, 6/10 in shares and 4/10 in cash. So when we've got a confirmed down, we build a cash position if we're stopped out of any of our shares. At the next confirmed up, which will occur as sure as day follows night, we run our uni search again, and we make sure that we're fully invested. So that's the procedure, relatively simple. Last year, we had 2 trades the whole year. Last year was an exceptionally good year for this methodology. The objective, capital appreciation, of course, dividends, and much more difficult here than in the US, income from selling covered calls. selling covered calls and shares that you already own. That's much more difficult at the retail level in the UK, very, very common in the US. I've tested this. Our American cousins have tested this. Our customers in the UK have tested this. And in the largest test that I did, which lasted 20 years, from 96 to 2016, through lots and lots of market types, we started with $100,000. Along the way, we made $51,000 worth of dividend income, which I didn't add into the performance chart. This is just purely capital appreciation. And in that period, we turned $100,000 into $683,000, which was a 17% compounded rate of return. As you can see the market went flat pretty much from 2000 to 2003, and you can see the spike down in 2008 where we got stopped out of pretty much everything. Nevertheless, the performance is quite good, and this is what it did in the UK last year, folks. Last year, 2019, it produced a 45% return in the UK market, and clearly we give a lot of that back. We give 15% of that back in February. Nevertheless, from the start of 2019 to March 2020, we were still up 30%. Last year, in August, we got stopped out of 2 shares. That's all. There was a confirmed down in August, and we got stopped out of 2 shares. So in August, we had 8/10 in shares, and we built a cash position, 20% in cash. When the next confirmed up appeared in September, we got fully invested again. It's all documented on VectorVest for you, and in fact, VectorVest will send you an email every evening when there's something to do. That's what it's done since April. That confirmed up signal that I spoke about on April the 27th. The top 10 shares, the top 10 RS shares are up 19.23%. Market's up 12%, and that's an annualized figure of 47.13%. In the US, over a 20-year test, it produced 17%, not including dividends. And in the UK, over the same period, it produced 14% compounded rate of return, not including the dividends. The dividends in the UK are slightly higher than in the US. So if you want a mechanical method of building wealth with very little effort, that's emotionally very easy to handle because there's very, very few mistakes. Very rarely do high RS shares drop the ball. Then our worry-free methodology can certainly be a great place to begin your investment journey. If I was managing money professionally again, and I'm getting long in the tooth, but if I was managing money professionally again, I'd put a lot of it, 60 to 70%, into our worry-free investing methodology. That's me. I'm David Paul. If you have any questions, you'd like to try VectorVest, vectorvest.co.uk, or you can get hold of me on david.paul@vectorvest.com. Thanks very much.